Hey there, welcome back to the channel. I take the stress out of money management, helping business owners to find simple solutions for both work and your personal goals. Today we're talking about something that can make or break your business: cash flow. Now, if you've ever wondered why money feels tight even when your sales are strong, or how to avoid those end of month panic moments when you're ready to pay yourself, well then this video is for you. So let's dive in. So why actually does cash flow matter? Well, first things first, what is cash flow? Simply put, cash flow is the money moving in and out of your business. It's not just about how much you're making, but it's also about when you're getting paid versus when you need to pay expenses. Even a profitable business can struggle if cash flow isn't managed properly, and that's why I'm here. So here's why cash flow matters. It keeps your business running day to day, but it also helps you to plan for growth and any investments you may want to make. And it prevents stress from last minute financial surprises, like tax, which shouldn't be a surprise, but where you haven't planned for it. So you could find yourself in a tough spot, even if your business is technically profitable. So this is more about the money when it's flowing in and when the money is actually flowing out. So let's look at how we can actually create a cash flow statement. So here I have an example of a cash flow forecast statement. So you can see here, and let me explain the way that I've done this. You can also use this for a budget kind of thing. So you can kind of look forward. We're looking forward for the next 12 months. So we're forecasting, or in this case, forecasting for the whole year. But what you can do, so you can budget it, but then you also want to be careful how you do this, because you want to make sure you know that this money is coming in as well. So let's say, for example, you've got your sales, so you've got your income at the top, and we can see clearly we've got sales that we know is happening for the first 3 months of the year. You've got other sales where you're having recurring income coming in. And so you've got your money coming in. So you can clearly see what you expect to happen within the next 12 months. And then you've got below what you expect to have happen going out. So your expenses, so you've got your wages, you've got your tax in there, really important things. You've got things like PAYE in there, or you might be paying VAT as well. So you've got all these different costs in here. But the key thing that makes this different to the budget is because it's cash, it's when the actual money's going to arrive. So you may, for example, have signed contracts, but the work's not going to begin till October. So that could be why you can see here, we know that we're going to be we signed the contract, but we're not actually going to start till get any sales in till these 3 months. So it's when it's actually going to happen. So what you want to know is, what have you got in your bank balance right now? Today, right? So say we're doing this on the 1st of January, you've got £5,000 in your balance, okay? Now you can see what's going to come in by the end of the month and what you're going to be paying out. And you can see you actually have net cash flow, so £3,600 net, okay? But because you've already got £5,000, you're actually okay. You can cover that, and it's still going to leave you with 1,400. So that's what you can see in this column here, the first column. That means now when February happens, you now start in February with 1,400 in your bank account. And then you see that your net flows is 1,400. So once all the money comes in and you've paid all your costs, you still have 1,400, meaning now cash in your bank at the end of February should be £2,800. And you get the idea. And why it's good to be able to look at this and forecast what's going to happen, because you can see those bits coming up in red. So I'm okay. If everything happens as it should, I'm okay up until August. But once I get to August, things start getting tight. And that's because my sales has dramatically decreased since May. So you can see it's gone down to just £2,000. But I still have costs that I've got to pay out. My cost hasn't necessarily dropped. So therefore, I now have net flows, and it's going to mean that I don't have enough money by the time August comes. Why is this brilliant? It means you've got time to mitigate this risk. So either you're going to have to make more sales, so you're going to have to get more money in this period leading up to August, or you're going to have to drastically cut costs. And costs here might not look like much that you can cut, but there might be some things that you can do. You may be able to look for different deals, for example. It may be that you have to stop marketing for a little bit or paying for marketing and do it another way, for example. But what this does, it gives you permission, okay, to do something about something before it happens. So mitigating the risk. So before you go into the red, you're able to look and see and think, oh my goodness, I need to sort something out before it happens. And then as you start to build more sales in here, I mean, I could literally just put in, say in June, you get £3,000 in. What that does for August, automatically you're okay for August. However, we still need to keep it flowing because of September, right? So this is what I use with my clients, but also I use this personally. So this is not just about my business. I do this with my personal finances, exactly the same technique. I have exactly what's in my bank balance and I know what I can pay. So if I'm saving for a holiday, for example, I can put holiday in here. Okay, but I need to make sure that I'm going to have enough money to pay for that holiday, okay, based on what's coming in and what's going out. So you can use the exact same thing for that as well. So that's why it's so important to have a cash flow forecast. It's a planning tool, but it's looking into the future, but it's looking at the actual money that you have. We're not just guesstimating here. And again, if something happens and say, for example, you're not able to fulfill this contract or whatever, then again, it's just going to give you that time to mitigate the risk and find something else to do. That's why it's important. So thanks for watching again, guys. So I hope to see you on another video. Remember to please subscribe and to share. This is the channel where I'm helping you to reduce the stress of managing your finances. Speak to you soon.